Welcome to Market Brief After Hours. It has been an absolutely historic day on Wall Street, and we have a packed episode for you. The U.S. markets didn't just rally today, they broke records. Can you walk us through those closing numbers?
It was an incredible session. The Dow Jones Industrial Average surged by 469 points, or 0.92%, to close at a record high of 51,671. During the day, it even set a new all-time intraday high. The S&P 500 climbed 1.65% to finish at 7,554, and the tech-heavy Nasdaq composite absolutely popped, jumping 3.07% to end at 26,684. In fact, for the Nasdaq, this was its best single-day performance since March 31st.
Those are massive moves, and the clear catalyst here seems to be a major geopolitical development. What exactly happened over the weekend to spark this kind of optimism?
The primary driver was an announcement from President Donald Trump that a deal had been reached to end the war between the U.S. and Iran. According to reports, a memorandum of understanding has already been signed electronically, with a formal in-person signing scheduled for this Friday in Switzerland. This news came as a massive relief to investors, especially after recent exchanges of fire between Israel and Hezbollah in Lebanon had raised serious doubts about whether a deal could actually cross the finish line.
And one of the most immediate, tangible impacts of this peace deal was in the energy sector, specifically with the Strait of Hormuz. How did the oil markets react to that?
Oil absolutely tumbled. President Trump announced that he authorized the reopening of the crucial Strait of Hormuz passageway, and Vice President J.D. Vance added that they expect the strait to remain open toll-free for the long term. As a result, U.S. crude oil futures fell about 4.9% to settle at $80.75 per barrel. Meanwhile, Brent crude, the international benchmark, dropped 4.8% to close at $83.17. Lower oil prices are a huge relief for inflation concerns, and that's a big reason why bond yields fell today as well. The 10-year Treasury yield slid to 4.471%, while the 2-year yield, which is highly sensitive to Federal Reserve policy, dropped to 4.064%. Essentially, the market is realizing that cheaper energy means less pressure on the Fed to keep interest rates high.
Speaking of market enthusiasm, we also have to talk about SpaceX. It made its public debut late last week, but the momentum didn't stop on Monday, did it?
Not at all. SpaceX shares surged nearly 20% on Monday, which is incredibly impressive considering they had already soared 19% during their public debut on Friday. What's really interesting here is how orderly the trading has been. Market strategists are pointing out that this doesn't look like a volatile meme stock. Instead, we are seeing institutional and retail investors adding SpaceX to their portfolios with the intention of holding it long-term.
Let's pivot to two of our main focus areas for today, gold and Bitcoin. Both of these assets saw some very dramatic moves. Let's start with gold. It's been in a bit of a corrective phase recently, but Monday was a different story.
Yes, gold staged a very strong bullish recovery, closing up 2.39% at $4,320 an ounce, after trading in a wide range between $4,219 and $4,369. Now, technically speaking, gold is still facing some overhead resistance. It's currently trading below its key moving averages, specifically the 50-day simple moving average at 4,582, the 100-day at 4,766, and the 200-day at 4,428. Because of this, the broader medium-term bias is still technically pointed downward. However, defending that low of 4,219 and bouncing so aggressively suggests that buyers are stepping back in to stabilize the price. If we can get a daily close above 4,369, it could pave the way for a test of the 200-day moving average.
And silver followed a very similar path, right?
Absolutely. Silver surged 3.19% to close at $70.17. What's crucial for silver is that during its session low of $68.04, it managed to defend its 200-day simple moving average, which sits at $67.70. As long as it holds above that level, the broader, long-term structural uptrend remains intact, even though it's still trading below its 50-day and 100-day moving averages.
Now, let's talk about Bitcoin and the broader crypto market. We saw some explosive activity there.
We really did. Bitcoin climbed back above the $66,000 threshold, finishing up 4.3% at $66,514. What really stole the headlines, though, wasn't just the price increase, but the sheer volume. Bitcoin's 24-hour trading volume skyrocketed by over 138%. It seems like the easing of geopolitical tensions brought a massive wave of liquidity back into the crypto space. And it wasn't just Bitcoin. Ethereum jumped 9.5% to $1,823, while other major tokens like XRP, Solana, and Cardano all posted double-digit gains of around 11% to 12%. This massive tide lifted crypto-related equities too, with Coinbase closing up more than 6% and MicroStrategy up over 5%.
Incredible! We have a lot more to cover, including a look at international markets, some key Forex technical levels, and today's biggest corporate market movers. But first, let's take a quick break. Welcome back to Market Brief After Hours. Before the break, we focused heavily on the record-breaking moves in the U.S., alongside the big stories in gold and Bitcoin. Now, let's expand our view globally. The geopolitical relief from the U.S.-Iran deal didn't just stay in New York, it swept across Asia and Europe. Let's start with Asia, because those markets went on an absolute tear.
Tear is the perfect word for it. Easing geopolitical tensions and falling oil prices gave Asian markets a massive boost. In Japan, the Nikkei index surged a staggering 4.99% to close at 69,317, breaking above the 69,000 level for the first time in history. This massive rally happened right before the Bank of Japan's policy meeting, where they are widely expected to raise interest rates to their highest level since 1995. Tech and semiconductor stocks led the charge in Tokyo, with companies like Tokyo Electron and SoftBank rallying between 7% and 10%.
And South Korea's market was so volatile on the upside that they actually had to pause trading, correct?
Yes, the Kospi index soared 5.20% to close at 8,545. The buying pressure was so intense early on that the exchange triggered a circuit breaker, suspending program trading for 5 minutes after futures jumped 5%. Chipmakers like Samsung Electronics and SK Hynix were up big, but LG Electronics was another standout, climbing over 11% on news that they are developing a custom blockchain network to optimize the global advertising market. Over in China, the Shanghai Composite rose 1.61%, and in Australia, the ASX 200 hit an 8-week high, gaining 1.25%.
Europe, however, seemed a bit more cautious compared to the euphoria in Asia and the US. How did those markets fare?
European markets started strong but lost some steam as the day went on, leading to a mixed close. The pan-European Stoxx 600 ended just slightly up by 0.19%. Germany's DAX and France's CAC 40 closed higher, up 1.05% and 0.4% respectively, helped by data showing Germany's wholesale inflation eased to 5.9% in May. On the flip side, the UK's FTSE 100 slid 0.39%, and Switzerland's SMI finished virtually flat, up just 0.07%, despite Swiss producer and import prices falling for the first time in 3 months.
Let's transition to the Forex market now. With all this macro noise, currency pairs are testing some very critical technical levels. Can you break down the major pairs for us, starting with the euro and the British pound?
The Euro-USD pair managed a modest recovery, closing up 0.20% at 1.1591. However, the medium-term bias remains bearish because the price is still trading below its major moving averages. The 50-day simple moving average is at 1.1672, the 100-day is at 1.1685, and the 200-day is at 1.1676. Sellers are still largely in control here. For the GBP USD, we saw a lot of indecision. It closed virtually unchanged, up just 0.06% at 1.3415. It's sitting right below its 200-day moving average of 1.3419, with the 50-day and 100-day moving averages acting as a tough ceiling around the 1.3470 level. It's really in a consolidation phase right now.
What about the Australian dollar and the Japanese yen?
The Aussie dollar had a solid day, with the AUD-USD closing up 0.43% at 0.7073. It's approaching its 100-day moving average of 0.7083, and it remains comfortably above its 200-day moving average of 0.6842, which keeps the long-term uptrend intact. Meanwhile, the USD-JPY pair is in a powerful, undisputed uptrend. It closed at 160.35, up 0.10%, right at its daily high. It is trading comfortably above its 50-day moving average of 158.95, its 100-day at 157.91, and its 200-day at 155.73. All of these averages are sloping upward, confirming robust bullish momentum.
Finally, let's look at U.S. economic data and some specific corporate stock whiffers that caught your eye today. We did get some manufacturing data that was a bit underwhelming, right?
Yes, U.S. manufacturing output was flat in May, missing expectations of a 3% rise. Also, the New York Empire State Manufacturing Index, which measures factory activity in New York State, grew at a much slower pace in June, coming in at 5.7 compared to 19.6 in May. But despite that sluggish data, individual corporate news drove some massive stock movements. In the tech space, Western Digital led the S&P 500 gainers, soaring over 15%, while Marvell Technology and Micron Technology jumped 11% and 10% respectively.
And we had a couple of big stories in the automotive and media sectors as well.
Ferrari shares jumped 4% after Morgan Stanley upgraded the luxury car maker to overweight. The analyst noted that Ferrari's recent stock decline was just value compression, not a sign of brand weakness, and that demand for their high-end collectible models remains incredibly strong. On the negative side, Fox Corporation shares plunged 16%. This came after Fox announced it is acquiring streaming platform Roku in a cash and stock deal valued at $160 per share. Investors seem skeptical about the price tag, even though Fox claims it will position them at the forefront of sports, news, and streaming. And finally, we have to mention Elicio Therapeutics. Their stock collapsed, closing down over 72% after they announced that their Phase 2 study for a pancreatic cancer vaccine failed to meet its primary goal.
A devastating blow for Elicio, but a reminder of how high the stakes are in biotech. That brings us to the end of today's review, a truly historic day, driven by geopolitical breakthroughs, record highs on Wall Street, tumbling oil, and major moves in gold and crypto. If you find this useful, please follow Market Brief After Hours. Thank you for listening, and we will see you next time.